Let's turn now to David Macdonald, senior economist with the Canadian Centre for Policy Alternatives, with more. David, good morning. What do you make of the slight decrease in inflation this month? Is this what you were expecting?
Yeah, I think this goes along with the general trend that we've seen over the last little while of inflation slightly above 2%. The Bank of Canada wants to see it probably at 2 or a little bit lower, but nonetheless, it seems relatively stable. We're seeing gas prices being one of the main drivers here, with gas prices coming down more rapidly this year than last year. This is what's been going on actually for quite some time, for about 6 months now, really aiding with that inflation number. But it's being offset to some degree by big increases in cell phone plan costs, insurance and home costs. Groceries, on the other hand, they're not going up quite as badly or quite as rapidly as last month in September, but they're still driving the index. So groceries up 3.4% this month compared to the overall average inflation increase of just over 2%. So it's going to continue to be a concern of Canadians that grocery prices continue to go up, even if not quite as quickly as last month.
David, I'm glad you mentioned groceries specifically, because you kind of have to dig below the surface to see what you are explaining to us. At first glance, I thought, well, I must be shopping at the wrong grocery store if prices are going down on food.
Yeah, prices are still going up. It's just that they're going up not quite as quickly as they were going up last month. And there's other areas too. We take a look at rent in particular. Rent had actually been coming down a little. Well, it hadn't been coming down. Its rate of increase was slowing over the course of the summer, but it's been ticking back up again over the last few months. Now over 5% again, year-over-year increase. So this is another driver below the surface of folks that maybe getting a bit of a deal on gas prices, but paying a fair amount more in rent. The net impact of this actually is starting to show up in the real wages line. Real wages in September were actually slightly negative, which is to say Canadians were getting paid slightly less on an hourly basis in September than they were at that time last year. That's actually the first time that's happened since the big boom in inflation that happened in 21-22. They're up again slightly in September, which is positive. The real question is how this all actually might bear on the Bank of Canada's next decision in December. Between now and then, we will see the third quarter GDP results, which are going to come out in 2 weeks' time. It's very possible that we would be in a technical recession, which is to say negative real growth in both the second and third quarters of this year. Even if it's not technically negative in both, the second of those quarters might be slightly positive, but it's not going to be a good 2 quarters. And so I think if we did get into the technical recession situation, that might put some pressure on the bank to start to actually move into stimulus territory. They're not there yet, even with this latest cut that we saw last month. But we might see that rate drop below that 2.25% that it's at right now.
Interesting, because the last time we heard from Tiff Macklem, he was signaling he didn't want there to be another drop.
Yeah, it's a question of it's not really what the Bank of Canada wants or doesn't want. It's what the economy, what actually happens in the economy. Certainly at this point, the bank is in the neutral rate range. So at 2.25, they don't believe that they're adding stimulus to the economy, nor do they believe that they are slowing the economy. They're in this neutral area. If they move below 2.25, then they would be in stimulus area. So they'd actually be helping the economy, potentially driving economic growth. And that may well be what we need, particularly if we're in a recession, or at the very least a technical recession in the second and third quarters of this year.
David, great to have you with us this morning. David Macdonald is a senior economist with the Canadian Centre for Policy Alternatives. Happy Budget Day. We'll talk to you again soon, David.
Thanks.